guess what? Payroll is back.
But now it is your problem. Let's talk about it.
Let's get fiscal. Let's get fiscal. Make it make sense. Money moves smarter. When the numbers click.
Hey. So payroll, it can get weird. And I think there's some ideas, I don't know, misdirection when you stop working for a W-2 and you go off on your own and you're like, payroll's a thing of the past. But then your business grows and then the IRS is like, hey, you should be doing things about this. And payroll is back. How do we even start with that? Like, how do you know when you need to run a payroll?
A lot of times, when you're a sole proprietor or a single member LLC, that payroll piece is going to happen when you file your return.
Okay.
So that's that big payment for your Social Security and your Medicare. Mm-hmm. But then once the business grows even more and it starts to need to become its own entity, so now
like
it's
separate
filing
of you.
its own tax return, which generally is going to be an S corporation. Then that's when that payroll piece needs to be handled on a W-2, and it's no longer going to be handled kind of within your personal return anymore. So that's kind of like the surprise.
You still have to do payroll, but now you're in charge of both the employer and the employee.
Yes. And a lot of times too, people say like, okay, so I changed, from a sole proprietor and I got myself an S corporation. So now I don't have to pay these like Social Security and Medicare taxes. And it's no. Unfortunately, they are always kind of going to be there. It's just the methodology in which they collect their money is going to be a little bit different. Or at least, I guess we'll see what it looks like, but,
they are always changing things, but we'll keep you up to date.
Yep. Right. If Al Gore has been talking about it, since him, it's been an issue. I think it's going to be, something that, we deal with as a society. But, for now, we are going to plan on continuing to pay all of the Social Security and Medicare. And so that either happens as your W-2 employee on your paycheck before you receive it, when you file your return, if you are a sole proprietor or a single member LLC, and then that kind of converts over to you being your own employer, and you kind of like circle all the way back to the beginning.
Running that paycheck for yourself.
Right.
Yep.
Right. And making sure. And so, like you said, a lot of people kind of get a little bit confused because, say that, well, I paid myself, but really it's just transferring money from
the business to you.
From the business checking account to your personal checking account. And while that's okay when it's a single member LLC or a sole proprietor, because that all gets filed within your same tax return, that doesn't really mess anything up. Once you become an S corporation and you're filing a completely separate tax return, then we start to have some issues there.
Yep.
And so you can still transfer money from your business to your personal checking account, but you're also going to have to do this extra step of ensuring that you are taking care of your Social Security and Medicare requirements.
It's a joint thing, right? Like it's like on the amount of money that you have taken, but also we should be talking about like paying yourself like a reasonable salary. It's kind of like a two-prong situation there. Yeah.
Right. So we kind of have a couple of different concepts. So when you take money out of the S corporation, the first bucket of money needs to be your reasonable compensation out of the business.
Okay.
But that also kind of implies, if you don't take any money out of the business, then there's no real requirement for the reasonable compensation because you haven't withdrawn anything.
Yeah.
And sometimes, we have companies that are, especially in a startup phase, where that might be the case, or they're investing money into the business and they're not really taking any money out. Things like that are happening. So normally when we're doing the bookkeeping, we're also looking for, what are the expenses that need to be reimbursed? Because first the business needs to pay back for everything that it used. Then we need to talk about our reasonable compensation. And then lastly, we get into distributions.
Gotcha.
So that reasonable compensation piece, it is really going to be limited by how much you actually take out of the business during the calendar year.
Gotcha.
And even if, unfortunately, the way that I calculate it is even if the business didn't profit that money, if you took it out, then it's going to count towards your payroll. So that means it could be last year's profit, or it could be you taking a loan out of the business. I don't necessarily care where this money came from, but it's the fact that you took cash out of the business. And that's what's really going to drive your payroll number.
Yeah.
And so that's one of the things to also consider because, especially in businesses that have like large fluctuations where maybe one year they're making $1 million, the next year they're making $300,000, that's not an unusual fluctuation, but that does mean that if you're eating into that profit from the prior year to fund your lifestyle for the current year, that payroll requirement is still going to be the same, even if the business itself isn't necessarily profiting 100% of that. So
just being very conscious of that.
Because, even in that scenario, it's not necessarily that you're adding income tax because, you're claiming income, but also claiming an expense. So they wipe each other out. But you are opening yourself up to additional Social Security and Medicare that maybe you didn't necessarily need to pay. So that's kind of where optimizing the S corporation salary really comes into play. And so optimizing the salary, I wouldn't necessarily use that terminology because we're not optimizing anything.
Okay.
We are claiming what actually is true and correct.
Okay.
So, for example, what I like to say to a lot of my business owners is if you were in a W-2 position, you would be working on your core competency 100% of the time. But now that you run a business, you have to do bookkeeping, you have to do sales, you have to do accounts receivable, you have to do accounts payable, you have to do, sometimes if you own a studio, you have to be the janitor. There's all of these other hats that you would have to wear that if you were in a large organization, there would be somebody else that would be hired to do that for you. But in a lot of cases, that the amount of money that they would be getting paid is less than what you would be getting paid at your core competency.
Yeah.
So we need to factor in what are all of the jobs that you're doing, and then what is that individual salary and how does that layer in? So that's sometimes where you see a salary where, let's say you get paid $100,000 if you went W-2 somewhere, but only $75,000 if you have your own S corporation. And that's because we're adjusting to account for all of the different hats that you wear in the business and what the true replacement cost would be.
Gotcha. Yeah.
Because even if you paid yourself $100,000, the same as if you got a W-2 job, that $100,000 would replace only what there would still need to be an assistant and a bookkeeper and all of these other things, if you wanted to fully remove yourself from the business. So that's really what identifying your reasonable compensation looks like. So it's not always somebody gave me this offer, so that's what I'm going to pay myself. Or it's also not, I just want to I want to pay myself $50,000 so that I don't have to pay Social Security and Medicare, or I want to pay myself $12,000 or, $25,000, we do need to make sure that it's reasonable. It represents the services that you actually provide the company, how much you work at the company, the location that you're in. And, but then, like you said, it's also limited by how much money are you actually removing from the company.
Okay. So, let's say we have a person, they have taken some money from the business, but they did like do the whole reasonable comp thing. They talked to their accountant. It may have been us. And like got all their tax planning stuff. And they did do a payroll. After they've run that payroll, or let's say that they like had been with us for a bit, they know how much they want. So we've been doing a payroll all year long. Once they've kind of hit that like payroll reasonable comp amount and the taxes based off of that, do they still need to be tracking as much about any additional distributions that they take from the business? Would they potentially have to pay more of that? Okay.
Yep. So, so once you reach your reasonable compensation, then that's when you get a distribution where you are receiving profit.
Gotcha.
From the company. A lot of times that profit is going to be taxed as part of your K-1. So it's not an additional tax implication when you take the money out, because you're going to be taxed on that profit at, when you file your return, regardless of whether you took it or not.
Gotcha. Okay.
But you want to hit your reasonable compensation, and then we start getting distributions of profit. But again, if you take more than the profit of the company actually is. So again, in scenarios where you take out a business loan, if you reached your reasonable compensation and then continued to take money from the company, then what you're doing is you're creating capital gains.
Gotcha. So there's some other stuff going
because
on there.
It's a return on your investment.
Got you. Okay.
And you're getting
so you need
above
to be
and
careful
beyond.
about that
right.
too.
Because then you could potentially be taxed on something and then also have this capital gains tax and all of that fun stuff. So it is like one of those scenarios where you want to be able to know what your equity section looks like.
Yeah.
And what is an equity section, you know, like at that bottom part of the balance sheet, that shareholders' equity, and really understanding what those numbers represent, making sure that they're true and correct, because all of that information is going to be recorded over to the IRS at some point in time.
Yep.
So.
Nope, that makes sense. I have definitely been in the weeds of that, of like digging through those and being like, no, wait a second, some of this is actually probably a business expense, and then moving it off or like doing all the fun stuff. So yeah, no, that tracks. So there's definitely some things you just want to be careful of. Yeah.
Just being able to know what it means when some of those numbers are negative. Yeah. Like that negative equity, because like I said, it's very easy to take out a business loan and then, you know, if you're living through the business, then now all of a sudden you have all kinds of other stuff that kind of comes into play. So really making sure you're understanding the ways that you can get money out of the S corporation. We also don't want to go the opposite way where, you know, every dollar that you take out of the S corporation is payroll, because just as much as you can get penalized for having too low of a salary, you can still get penalized for having too high of a salary as well. You know, because then if there's no business purpose to an expense, then it's no longer a business expense. So if it's not a business expense, then that's going to drive up your profit. You pay income tax, but you've already paid Social Security and Medicare, and that's, you know. So, you know, it is very important to make sure that you are getting to that reasonable number that is actually true and correct, because too far one side or the other is going to kind of get you. So making sure that you understand what your salary is, and also when you're required to pay that salary, because again, we don't want to pay anybody more than what they need at this time, you know, is really going to be important when you're looking at kind of that circling back to the beginning of doing payroll all yourself again.
Yeah, but with more things that you have to do.
But more. But wait, there's more.
It's not just like signing up for your W-4. Now you have to sign up as a business to pay yourself and then still do the W-4. So it's like a whole thing. I think we have like calls with like new clients and stuff like that, and I do like okay, when they're like, yeah, I've been paying myself payroll, like I transfer this amount every blah blah blah, and I was like, oh, that does not count as that. Like there's a lot more steps here that we're going to need to do. And like, let's get that dollar amount and know exactly how much you've done it and make sure that you're up to date. So I do think like, especially if like you've been doing it all yourself for a while, it's just making sure that your books are accurate. You have the accurate data. So that way, when you are at this point and you're like, okay, maybe I throw in the towel at payroll and I get some help or whatever, you're able to give them a real good picture of what actually happened. Because then it'll like coming to you, it'll help you then suggest how much they should process and then, you know, do all those things. But yeah, so again and again, we like to harp on it, but keeping it clean, keeping like records of everything that you got going on and a nice, like, somewhat easy. I'll take an Excel if it has like the data in there. Like I'll take it. Just just somewhat put together situation so it's not a lot of guesswork and to kind of help out with that.
Yeah, it's I think the idea that everything comes with a cost. So even though all of there's so many tax savings for S corporations, there is still a cost to them. Yeah. And so making sure that you're aware of that and able to account for that in all of your planning is going to be pretty important.
Yep. Make sure it's beneficial to you before you do it. It's always really good.
So if you have any questions about payroll and what your reasonable compensation should be or what that is, feel free.
Bring those paper receipts over here. Come talk to us.
And we will talk to you soon.
Bye.
That's it for this episode of Let's Get Fiscal. If this helped you see your business differently, follow or subscribe on your favorite podcast platform so the next episode is already waiting for you. And if a specific money question came up while you were listening, send it through the link in the show notes. Real listener questions help shape future episodes. You can also follow Let's Get Fiscal on social media for more tax tips, business finance breakdowns, and clips from the show. Until next time, keep building the business behind the work.